Welcome back. In this video, I'm going to be analyzing United. They had their earnings today, and I have a fresh set of financial statements to take a look at and update my valuation for this company. I started buying into United after the pandemic. I thought it was the best airline out of the lot and have been investing in this airline for about 2.5 years. I'd like to update my analysis and make a decision whether I'm going to buy, hold, or sell. I record videos and share them on YouTube. I've learned a tremendous amount being an individual investor with an aim to maximize the return on my portfolio. I learned a ton online. What I'm also realizing is that a lot of the comments that are coming into my videos help me as well. I put out my analysis and other investors take a look at it. In some cases, they challenge some of my assumptions, which is very good. Sometimes I agree with them. Sometimes I stick to my analysis and we disagree. But I hope that my point of view gives you just one more investor's outlook on a particular company. In this case here, I'm going to look at United. Do me a favor and like my video and subscribe to my channel if you like videos like this. Now let's get into United. I have a scorecard that I follow as I evaluate companies and decide whether I buy, hold, or sell. And I go over 4 questions followed by a decision. First question, do I want to be a part owner in the company? Do I like the industry? Do I think the company is being operated well and is debt less than 3 times EBITDA? And last, I want to discount the stock so I could see my investment go up in value. And based on the answers to those questions, I buy, hold, or sell the stock. Now, airlines have been doing really well with leisure travel, including United. Boy, a lot of people want to go on vacation. After COVID, they just wanted to get out and go to the vacation spot they wanted to go to. They paid high prices and they were willing to do so. Now I'm expecting that business travelers are going to return to the airways. They've been in their home offices for a while now, not really visiting either their corporate office or customers or colleagues. And now we're beginning to see that pick up. And once the business traveler returns, that tends to be in the more profitable area for an airline. So I'm thinking that there's still demand out there for United. And overall, I think for the next couple of years, the airline should continue to grow their revenue. And the trick is they have to be profitable and generate those free cash flows as well. Looking at the income statement for their quarter that was just announced today, revenue really did grow nicely. It grew 12.5% in the quarter. If you compare the last 3 months of the year, or the Q3, I would call it, compared to Q3 of 2022. Year to date, it's up 23%. So revenue is really looking good. Overall, the company is profitable. They have good net income in the quarter, as well as year to date, they have good net income. And the earnings per share looks good as well. The statement of cash flows, the cash from operations went up significantly. But surprisingly, the amount of capital they put back in the business went up as well. This combination surprised me. I expected free cash flows to be much higher in the quarter, and I use free cash flows to value a company. So this is really going to affect my valuation. Based on the new numbers that I have off their financial statements, I believe that United is currently discounted at 33% if you compare their current stock price, which is $40.12, compared to the value that I'm calculating for United. I value the company based on 2 methods. One is the free cash flow method. And then the second is looking at earnings per share and estimating where I think the company is going to be valued based on earnings per share. Looking at free cash flows first, my best estimate for this year is going to be to take the first 3 quarters and then annualize it. And based on that formula, I'm going to have $3.6 billion as a starting point. I don't think the times are going to be as good in the near future as they are today. So I'm going to actually take the free cash flows down by 10% for the next 3 years. Then after that, the terminal value will have 0 growth rate. So a nice stable expectation for United. I'm going to discount all those free cash flows by a 10% weighted average cost of capital to get to $28.4 billion of value out of those free cash flows. I'm going to add the cash on the balance sheet and take away the debt to get to an equity value of $15.9 billion for those free cash flows plus cash minus debt. The market cap for the company is $13.1 billion. So it offers up a 21% discount based on free cash flows. Based on earnings per share, this is the best earnings per share number for the next 12 quarters. And based on that number, using a PE of 10, which is reasonable, they are growing, 0 growth rate, and based on the earnings per share valuation formula, which is right here, I get to a value of $62.35, but the stock's trading at $40 per share. So it offers up a 55% discount using the earnings per share method. I blend the two, but put more weight in free cash flows, 2/3 free cash flows, 1/3 earnings per share, and I get to a blended 33% discount on United. The last time I filmed a video for United was July 20th, and the picture looked very different. The stock was up 52% year to date. The company was really taking off, and people really saw that growth as being a great opportunity in the airline business. And I was feeling good because my investment was up significantly. But ever since then, the stock's really tumbled. It's down significantly. Now it's up year to date only 7.8%. So it's been a really tough ride down for the stock. And I've seen my position, and it's a pretty good sized position in United, go down in value. But, as an investor, we're always learning, and we see where we made our mistakes. My mistake was I think I used too high of a free cash flow estimate, and that's on me. I made the decision to take the free cash flow method that I did to value the company and ended up buying more shares based on that data. Hindsight's 2020. Now that I have a fresh set of financials, I see that the free cash flow really is going to be smaller than what I had previously had in my model. So let me scorecard United. I think the company is very good. I think the airline is very well run. Airlines are not my favorite industry, but they were so discounted, and now their growth is so good that for now, I like the industry. The company, the management team is excellent. I think they're doing a great job operating the airline. I think that debt is well below 3x EBITDA. I didn't display that, but it's actually at 2.2% or 2.2 times EBITDA. And the discount of the stock's available, but I'm going to hold. I'm going to hold because that drop in the United stock has really been a painful one. I'm going to wait another quarter and decide whether I should sell my shares or buy some more shares or just hold. And in the interim, I may sell half of my position in United just to kind of take some risk off. We're in a rally in the market. Today is October 17th. I've had all my other stocks rally, and it's a good time maybe to take a loss and pair that loss with some of the gains that I've recognized, and therefore have a tax benefit from selling my United stock at a loss. That's my video on United. I'd love to hear what you think about United, what you think about airlines, and what you think about my video. Please comment. I'd really appreciate hearing from you. And do me another favor and like my video and subscribe to my channel if you would be generous enough to do so. With that, let me wish you the best of success in investing in 2023.